You have no welcome introduction. It will be just for a few minutes, right? Just to share one information, a lot of my colleagues and some of the friends I've receiving text messages since this morning, they had a flu. So we had an epidemic of flu in New York, so there were a lot of people who were supposed to come in. I have at least 5 or 6 very my close friends, and they were like doctors and some of the pharmacists, but they just got messages since this morning that they're saying they had flu. They're sorry, they would not be able to make it. So but I still appreciate all of you for coming in here. And hopefully after they grab the coffee, we're just going to start right away. And just to also share with you that right now this webinar, this seminar is also live. It's all over the world. We have few investors from Middle East who are interested to make some investments over here in America in real estate. So they will be hopefully watching also our seminar online. If you go to our website, the www.alarafafunding.com, there is an icon over there, live seminar. Once you click live seminar, it will bring you into our seminar as live as we are talking. So I think we're just going to start. So on behalf of Alarafa Funding and our team, we would like to welcome you, and we would like to say thank you for coming in today. We all know today is Sunday. It was a long weekend, and I appreciate all of you for taking out some time. And we have put some information together for all of you, so that hopefully when you will walk out from here, you will walk out with some wealth of information that will help you to make some financial decision in your investments. An investment that we will be talking about, 2 types. One will be how to invest your retirement fund, 401k, 403b, SEP IRA accounts from self-directed IRA into real estate, and also how you can invest your private investment, your spendable money, and convert your $150,000 into $1 million in 8 years. And we will have put some PowerPoint presentation together. Everyone has a printout also. You can take home, you can study that. But hopefully we will be also talking live. And we will also have our partner, New Direction IRA, who will be also explaining you in brief or in detail how we can convert your 401k and what are the documents, what are the processes involved to convert your funds into a self-directed IRA, where you will be able to invest that money in real estate. So before we move forward, I would like to invite Mr. Giyas Boyan. He's also one of the principals of Alarafa Funding, to just give you a little introduction of our company, and then we will move into our PowerPoint presentation right away. Thank you.
Hello everybody. Good afternoon and welcome to Alarafa Funding. And basically, just whatever I'm going to tell you, and is not that none of you know, all of you know, and all of you are familiar what we are talking about. And very simply, if you go every block, there's an investor. Every house, there's an investor for real estate. I have like some people, I say, what do you do? I say, I'm a real estate investor. I say, how many property do you own? I say, I'm thinking to buy one. So, the reason I'm saying everybody consider themselves a real estate investor. Now, in this market, I don't know how you define. You can say that this market is depressed. A lot of people, they consider it a depressed market. Maybe 2006 and 2007, you will see very high peak time for real estate. People are selling the very high prices. People are buying property in the morning. In the evening, they're making $30,000, $40,000, $50,000 profits. That's how was the market. But one thing, if you know about the real estate market, there's always money to be made. So now, we have the team of expertise that is behind us, and we have our whole team in here. Most of them is here, and all of you agree that once you know what to buy and what to do with the property, and very easy to sell and make profit. I and Brother Fawad, we've been in this industry for the last 15, 20 years, and we thought that we see a lot of ups and downs in the real estate market, and we also been working and buying and selling one and two here and there every year, every month, and we've been doing it. Then we put it together that a lot of people, like 401k, self-directed IRA, even private investors, a lot of them like $40,000, $30,000, $50,000 sitting in their account and not doing anything. So my friend David will say, yes, you're taking my money away. So they invest in CDs and that stuff, and they get maybe 2%, 3%, maybe if they're lucky, they get 4% return. So we came up with an idea that if we can put those money together and if we can buy in a bulk from the bank, like pre-foreclosure, REO, short sale, and if we fix them and if we flip them very fast, like within 2 to 3 months, 4 months, 5 months, and we make good return. Now, there's two different types of return. I'm going to talk very briefly on that. One, if you do investor, that I was categorized first, that every house we find investors. If you're one of the investors, it's very tough to make money because you are not getting a competitive discounted rate. But if you're having like $3 million, $4 million, $5 million proof of fund in working with this money, you can go to any bank, most of them, but of course we have the very good connection with a lot of banks, lenders and stuff. So we go there, look, here's the $3 million fund, so give me a package. So they make us a package like 40 cents a dollar, 45 cents a dollar. And we can package them like maybe 2 to 3 properties together, and we can make 20, 30% profit. And we can sell it to the investor. And they will make the repair and fix it, and they will sell it to the end buyer, and then make the money. So what we are talking about here, that we buy the property in a package, 30, 40, 50 properties together, and we are making the package for the investor, 3 property, 4 property, based on their need. And this is the place to make money. And we put this Alarafa funding based on that, the real estate investment, and which is making things happen at the moment. And now, briefly, I'm going to tell also that what is Alarafa funding making unique from the marketplace. A lot of you, if you invest money in 401k, IRA, Roth, SEP, there is a small time frame that you might lose your principal money. But here, there is no worry. You would not lose any money. The reason? The money, whatever money we're gathering together, we buying all the property cash, or the money is sitting in an account. If you're not utilizing, buying the property sitting in the account. And also, whatever the money you're putting, you're becoming limited partner to the amount of investment. So there is a money you are putting with us is 100% guaranteed. Because we are not taking any kind of mortgage or any kind of financing that which is cost is high, that maybe we will not be able to sell the property in a targeted return. So this is the good part about the Alarafa funding and also make it unique in the market. And without further delay, I don't want to bore you. I'm going to hand out the mic to Mr. Fawad Khan, and he will talk about the whole process of the self-directed IRA, how does it work and everything else. And let's hand over to him.
Thank you, Gyas. I appreciate it. And we will be talking about two aspects of this investment. One is self-directed IRA, how to invest the money in self-directed IRA, and the other one is private investment. For everybody who's a passive investor who invests money in market in stocks, we just have one simple question to them, that are you disappointed with your returns? Some people are, some people not. But right now in certain markets, in downturns and upturns, people do get some disappointments at the year end. Have you suffered losses in the value of your retirement funds? Some people, when the market crashed in 2008, we all know if we had a portfolio of $100,000, all of a sudden it was worth $30,000, $40,000. Now, if you are an IRA owner, and if you have a 401k plan, Roth IRA, SEP IRA, if you are an owner, then technically, if you have a fund that you are looking for a safer investment, then Alarafa funding has the answer for you. And our answer is to invest, to help you to move your money into a self-directed IRA, which we also call your investment with your own checkbook. And definitely, we will be talking about how we can convert your investment into your own checkbook, which means that you will be independently, will be able to make a decision to make an investment. It is not only real estate, you can also, there are other options that IRA and IRS allows you to invest. It could be in deeds, it could be buying trust, it could be buying bonds. But then you will be, by moving your money from your regular IRA to self-directed IRA, it will allow you, give you a freedom to make investment, but however, you will be responsible of your any losses or any gains. So as per IRS, Section 408, Section 408 allows you to invest, an individual can invest their money into a self-directed IRA. And you can also invest, one of the investment, you could also invest the money in real estate investments. And in real estate investment, you can invest the money in commercial properties. In your residential properties, could be condos, one family, two family, mortgages. You can invest the money in trust deeds, real estate contracts, and many others. But we are only focusing on investments in real estate. Because we do not want to give other information and give other details to people where they get distracted, because we are only focusing, our experience, our expertise is investment in real estate. So this is a simple, very simple process. And as you all know, we are partnered with a company called New Direction IRA. That company will help us to do all the paperwork and all the processes. And they will be doing a presentation. Mr. Malcolm Clay will come at 12:45 p.m. today, and he will explain to us in more detail how this whole process. But just to give you an overview, a summary of the whole process, that we will help to set up your IRA account with a New Direction IRA. The next step would be that they will help you to transfer your fund from your existing custodian to a new custodian. They will also help you to open a bank account where these funds will be transferred. That bank will be FDIC insured. And they can also open their own bank account in their own bank if they want to open a TD Bank, Chase Bank, Citibank. But we will try to refer all of our clients to one bank, which will help us to have a relationship with one bank. So if we have any transaction, any activity, we can also help our clients. The next step is that they will transfer their retirement funds to self-directed IRA, and once the funds are transferred, then they will be the holder of their IRA fund. From there, just like holding a checkbook in their hand, and they can, at this point, they will be able to make their investment, and that's the time that they will authorize New Direction IRA to invest their funds or sell their retirement fund into a Alarafa Funding LLC. These investments will be in their account, and income will be all reported to their account. Remember, anybody who's investing from their retirement funds, the profits will be returned to their retirement fund. They will not receive the profit as a cash into their bank account. It has to go back to the retirement fund, and at the end of the year, they will going to receive an evaluation report, and that will be filed to their IRA fund. Once you are investing with us, we just wanted to make sure we give you a little overview of what we are doing. So technically, Alarafa Funding is a real estate investment company with a strong foundation of residential and commercial real estate. Alarafa Funding team has capability to effectively evaluate, acquire, and manage high volume of distressed residential and bank-owned properties. And our objective and goal is to maximize profit. Our objective is that once you invest the money with us, we wanted to make sure that you maximize your profit. And if you compare your funds with the 401k, 403b, you should see, if you look at the regular statement for any Fidelity, Vanguard, and any other funds, when they invest in mutual funds, the regular return or a CD return is not more than 7%, 8%. But we are hoping to give a return over here somewhere between 30 to 40%, which would be secured by real estate. And this all investment is actually a joint venture. Joint venture that when an investor makes any investment, he looks for three things. One, security. Two, longevity. And second, rate of return. Hey, what is going to happen to my money after 5 years, 2 years? What return I am getting? Whether it is safe and secure to invest with this company. So what we have designed our strategy is that any investor who will going to invest with Alarafa Funding will become a limited partner. We are a general partner and they will be a limited partner, which means If there is a person who is investing $100,000, and he will have an equity and ownership in the company, Alarafa Funding LLC, equivalent to their amount. So tomorrow, if we have a $10 million in our company, and if there are 35 investors, each investor will have ownership equivalent to their investment. And second, that investment and that portfolio will increase proportionally every year. For example, someone invests $100,000 and we make 20% profit. So now his portfolio, his equity will be equivalent to $120,000. Next year we make another $20,000, $30,000. Next year his equity will be equivalent to $150,000. So gradually and slowly his equity will also increase. And definitely with that, our company equity will be also increased. For every investment, everybody needs a strategy, okay, to see how we're going to invest our money, where we're going to invest our money, and what's our timeline we are referring to. With our investment strategy is to obtain properties from the banks with 40 to 50% below the market price, which means that we have very good relationship with some banks who are willing to negotiate a bulk of properties with us, let's say for a 30 to 40 cents for a dollar. That's where our strength is, that's where our gain is. If you as an individual would like to go outside and like to search for a property, you may find the properties through different brokers, but then they will be already having a profit that will be hidden into their price. So we are actually buying all the properties direct from those banks, which will be 30 to 40 cents for a dollar. So after buying the properties, some of the properties may require some rehab, maybe require some work. So we will renovate the properties, and we have a team who will do that. We have a construction company who is our part of the partnership, and they will do all the renovation. And by doing the renovation, that will add on to the value of the property, and then we will sell those properties to our high-end buyers. As we all know, we have a company, a Provident Group, and Mr. Gias himself is a licensed real estate broker. To sell those properties in the market is not a problem for us because we are going to list all of the property in our MLS listing, and that will go out to all the high-end and other buyers. The third type of property that or third type of investment we may do is we buy some properties which are very good properties into the rental area, for example, like Manhattan, Queens, Astoria. And we may rent those properties for a while, and after 2 or 3 years, maybe if we see that the target acquisition has been achieved, then we may be able to sell those properties. But those properties will be part of portfolio of Alarafa Funding. This is just an overview to have a little understanding of who is participating in this company and what is our goal. Our goal is to purchase, renovate, and rent residential properties primarily in New York, New Jersey, Connecticut, and definitely other states. But we will still focus to stay within the tri-state area, which is New York, New Jersey, and Connecticut. And our general partner is Alarafa Funding. And as we all know, my name is Fawad Khan, and we have Mr. Gias. We two are the only principal of this company. Property types. We will be looking into primarily residential, mixed-use, and commercial properties. Our target market, as I mentioned earlier, will be New York, New Jersey, Connecticut, and other states. And our target discount, which is the strength of our profit-making strategy, is that we will be buying the properties directly from the banks with, let's say, 30 to 40 cents for a dollar. And our redemption is we are looking for a commitment of approximately 3 to 5 years. Because sometimes someone may want to just come on board, let's say, with $100,000 in September. So it is going to take us, by the time we invest his money into a pool and we buy and sell a couple of properties, then we will start seeing some return. So we are hoping, because we're going to work very hard, we have a team, so we are looking forward to have a commitment for at least 3 to 5 years. And by also, in addition to that, even this commitment is not that they are going to commit and their money is locked. If they would like to have their money to be returned, or they would like to withdraw their investment, they can just give us a 30 days notice. We'll be happy to transfer their, if it's in private investment, will be returned as a cash. And if it's an IRA investment, the money will be transferred to their IRA fund. How we will distribute our profits. This is very, very important for everyone to understand. And as an investor, everybody wants to know, okay, I'm investing, how this Alarafa funding is going to make money. We will not make any money until we make 7% of profits. So let's say if someone has invested $100,000 for any reason, if we made only 6% profit, Alarafa funding is not charging or distributing any profits from there. We want you to make money after you make minimum 7% from your investment. We also, after 7%, let's say if someone has invested $100,000 and now we make 30%. So 7% will go to them, and out of 23%, Alarafa funding will charge 30% of the profit and 70% will go to the investor. And I will show you the next illustration, even after charging the 2% our management fee, and also giving you and taking 30% out of your other distribution profit, you will still come out with 30 to 40% at the end of the year. This is a very good example of our investment of $150,000. For example, if you are investing $150,000 first year, and if we make 40%, out of 40%, we are already giving you 7%. So now we are left with 33%. If we take 70% of the 33%, that comes up to approximately 22%. And then we add back your 7%, so you're still making 29% minimum profit. So if you take $150,000, you invest it for 8 years, you will have guaranteed $1,150,000 in your portfolio. It could be IRA fund, it could be a cash investment. And how it is happening? Because what's happening is that $150,000 you invested, you made 29%. Now your portfolio net worth is $193,000. Now we are reinvesting this $193,000 second year. Now at the end of the next year, you have $249,000. So your profit is compounded. And every year, your portfolio is increasing. Now instead of 30, now you have $322,000. Last year, you will have $890,000. When you will invest $890,000, you will have almost come out with $1 million. Now, some people say, oh, I know, it's not true. But yes, it is true. And I'll give you one more example of that. For example, this profit ratio could be higher. Why? Because if you give me $100,000, if I make one time $100,000, we are buying all property cash. If you buy cash property, you can close the property in 2 days. So there is no wait in the property. Then if we have to sell it, most of the time we will be selling our properties to the investors. And they are already there waiting for properties, and we mark up our 20 to 30%. That $100,000 we can recycle 3-4 times. So if we are making one time 20%, at the end we may have maybe 60 to 70%. But conservatively, we are saying at the end, hopefully we will have 40%. At a 40% conservative approach, $150,000 in 8 years could be worth $1 million. So if you think that you have $150,000, you can definitely be a millionaire after 8 years. And if you say 5 years, you wanted to say, okay, no, I had it, I don't want to invest any more in real estate, maybe you want to start your business, definitely you give us a 30 days notice, we'll be happy to transfer your fund. If it was a cash investment into your checking account, if it's an IRA investment, it will be transferred back to your IRA fund. Because some people do not like the aggressive approach, this is a very, very conservative approach of investment of the same amount. So if we invest using the same strategy of $150,000, if we make, for argument's sake, 30%, and if your current profit is 23%, still you will come out with $785,000. Now, remember that this investment is in real estate. We will have two types of assets in our company. One, either we will have cash sitting in the bank, or second, it will be in the form of a real estate, which will be out in the market. And if there is any downturn in the market, so remember that we are already buying the properties which are below the market price, 40 to 50%. So there's a lot of cushion to minimize the risk of the investment. That is the safety net that we have, and that is the strength that we have. And also, it's very important to understand the type of property that we will be dealing with. We will try ourselves to refrain ourselves to not to go into detail of the cosmetic work. So we may just do only little cosmetic upgrades, price to sell that below the market price, and we will also stick with the properties which are at least built after 1950. And they are at least 1,000 square feet and larger, and they are 1 to 4 families, and they are located in the desirable neighborhood, because desirable neighborhood is very important factor of buying a real estate. So we do not want to buy a real estate where it's a declining market, where it's hard to sell, even to investor or either to any end buyer. This is just a brief introduction for myself. It's very important that if you are investing, you need to know who are the principals, what they do, what their background is. So my background, by profession, I'm an accountant, and I have almost 20 years of experience in the financial industry, helping some of my clients in investments, in mortgages, also in different type of other investments. I have been also working for a company called Ijara Loan. Yes, and we are currently also a franchise owner of Ijara Loan. We provide financial services for Islamic loans. So we have been doing it for almost, and as we all know, Giyas has also his detail what he does and what he has been doing. He himself is a licensed broker, and he had his own mortgage bank. So Mr. Giyas Bhuyan has 15 years of financial and mortgage industry experience. He became a mortgage broker and licensed real estate broker in 2004. And currently he's an owner of Provident Assets Inc. and Provident Realty Group. He has utilized his financial and mortgage experience in real estate investments. And currently he's engaged in real estate investment and also working with our Ijara Loans, providing as a services for a Sharia finance consultant. Also, when you are investing, for example, you are investing in a bank, you want to know who they are, what their team is, do they have expertise, do they have the knowledge? So it is very important that we must introduce our team today, that who we are and what the background of our team is. This is New Direction IRA. New Direction IRA is a company that we are partnered with. This company has been involved and has been servicing clients to transfer their money from their existing regular IRA into a self-directed IRA account. The owner of the president of the company is Mr. Bill Humphrey. He's a CPA and also a tax consultant. And the president of the company is Catherine Wine. She also has a great experience in accounting and also record keeping for self-directed IRA transactions. They have been dealing with a trust company, and that the name of the trust company, I just forgot. The trust company is the First Trust Company, and that trust company is holding almost 80,000 self-directed IRAs. And the value of those self-directed IRAs is approximately $7 billion. So they are pros, they are tax expertise, they have the tax expertise, they have the knowledge, in-depth detailed knowledge of all the IRA transactions, and they will be also providing our assistance to our clients if they have any question while we are transferring their funds from a regular IRA to a self-directed IRA. And we also have our team, Mr. Amir Hussain, who is an associate broker. Amir, please raise your hand. Here you are. Okay, he just stepped out. So Amir has been a broker for almost last, I would say, 10 years. And he is our also director for marketing. He is helping us out to find out, to develop some relationship with the other real estate brokers and other real estate companies. Then we have Mr. Iman Barao. Imam Barao is a loss mitigation officer. He has a very good relationship with a lot of banks. He does all the litigations and try to do all the paperwork for all our short sales. Then we have Mr. Shabir Ahmed. He's also our sales director. Shabir Ahmed has been involved in the real estate for almost like last 10 years. And he has almost done of sales of real estate maybe 10 to $15 million in the last 2 years. So they all have a very good knowledge of real estate, short sales, REO properties, and they understand the nomenclature of the industry. In addition to that, we have 7 licensed real estate agents who help us to sell our properties in the market. Then we have our legal advisor, our law firm Biscardi, Basner and Bigelow, and Mr. Luke Bigelow is there, our attorney and also legal advisor. Then we also have, whenever we have a property we need to rehab, we have US Shell Tac Inc., who is our licensed general contractor. I think he's just running late, but he was supposed to be here. So he also helps us out to just rehab our properties. So it is very important that to understand that what team we have, and they all have the expertise to execute the transaction that what we have been talking about. Now, this is also very important to understand that from where we are getting these properties. Our source of property are short sales, REOs, and off-market foreclosure. Short sales are less competition and they are better deals. REOs are moderate, built-in equity, quick deals, and we can have 30 to 40% profit. And off-the-market foreclosures, which sometimes we negotiate with some of our private clients, we have a team who will be starting just for some pre-closure accounts where they will be going door to door and knock some doors and develop some relationship and develop some potential leads for our pre-foreclosures. This is just an example, a picture of some of the properties that we bought and we sold. And these are the properties that we bought and sold. This is the property that was front, that is the kitchen we did, the bathroom and inside. So this is just a proof that what we have been doing for the last so many years, and we have a track. In addition to that, in our PowerPoint presentation, we'll talk about our track, that how many properties we have bought and sold. Since we are talking about the real estate investment, as we all know, we all have some fears. People have lost a lot of money in real estate, but now there is another time to invest in the real estate. Gradually there is an upward swing in the real estate. And this is the latest information from Realty Track showing how the trend is gradually increasing. The housing market is gradually gaining confidence. As you can see, this was the bottom line in 2008 when the market crashed. And then now gradually, as you can see, the graph is going up, and now the last year, 2012, they had almost $715,000 houses were sold compared to $540,000 in 2009 and 10. So gradually, the buyers are coming into the market. Investors are also coming into the market. So this is a very good time to gain a momentum if we are planning to invest in real estate. Okay, we have actually Mr. Clay Malcolm who is dialing in. If you just give us a minute so we can ask him to just wait for 1 minute, and then we can maybe wrap it up in 5 minutes. Ask him just to wait 10 minutes. I think you can ask. You can wait 5 minutes. Hi, Clay.
Hello.
Hi, Clay. Would you mind just waiting 5 more minutes because we are just wrapping up over here?
Sure. Do you want to?
You just give me 5 more minutes. And would you mind dialing back again in 5 minutes? And I will try to see if I can wrap up in 5 minutes.
Okay.
Thank you. Thanks.
Yep.
Sorry about that. Sorry about that. That was Mr. Clay Malcolm. He is the business director from our company, partner company, New Direction IRA. He will give us a little bit overview of how the paper process will be processed through this whole transaction. So now I'm just going to quickly wind up. This is also our important to know our track record, what we have been doing. If you look at it, these are the properties that we bought and we sold. And in your PowerPoint presentation, if you have a folder, you can look into more detail. We have made profits in different properties that we bought and sold. If you look at one profit, $286,000 profit, $165,000 profit, $125,000 profit, $217,000 profit, $182,000 profit. Profits over 40%, 30%, 20%, 9,000%, which means we bought in the same day. It was bought and sold in the same day. And we have a 744% profit. While looking at this track, we have bought and we have sold all these properties. And we have made money on these properties. So if you also wanted to be part of this upward swing, which will be happening in 2013 and 14, so this is the time to invest in real estate. And if you would like, these are public records. You can go and check these properties online, and you will see how much they were bought and for how much they were sold for. Since I have very few minutes, I'm just going to be moving forward to just to let you know, every time when you have any business, you have to use some technology. You have to process your information. So for property management, we are currently using AppFolio for per property. And that system tracks the accounting system for all the expenses for each property. So we can actually at the year end do a proper bookkeeping and accounting for a profit distribution purposes. For our accounting team, the accounting team is using FundEasy software to track all of our accounts. These are the companies who are on the Wall Street, and these companies are currently recommending, or they have actually, people have invested in real estate investment, in real estate stocks, and they gave a return of 40 to 50% regardless of the downturn of the market. If you go and look at these companies online, you will see in their real estate section how much profit they have given in 2012 to their investors. And this is just our contact information. And I would like to say one more time, so thank you to everyone for listening to me. And hopefully we have just shared some information to you. And after the seminar, will be available for you also for any QA. Now I'm just going to wait for Mr. Clay Malcolm to just dial in a few minutes. And then he will going to give us a little bit more information about how he will going to process your paperwork and move your money from existing IRA into a self-directed IRA. Thank you very much. Just give us like 1 minute if you like. You can have some water, some cold drink, and he'll be just dialing in shortly. And I forgot to introduce the most our important person, Mr. Asim Khalil. He's our IT guy. He is the person who's in charge of all these Skype connections and all the other connections. Without him, we cannot make this possible.
So kind, thank you.
Right, so you can. Just got it.
Hi there.
Hi.
All right, we seem to, we're going to go ahead and pass it over to you. So,
Okay. Can you
Hi.
see and hear me? Okay.
Hi Clay, this is Fawad Khan. How are you?
Hi, Fawad. I'm
Okay,
good.
I am putting your mic right next to my laptop. I will make sure that everybody can hear you. Just give me 1 second.
Okay.
Okay. Can you just introduce yourself, so just to make sure everybody can hear you, please?
Sure. My name is Clay Malcolm, and I'm the Director of Business Development for New Direction IRA.
Can everybody hear him? Okay, go ahead, please. You're on.
Okay. Greetings, everyone. Hey, really appreciate the opportunity to talk to you a little bit about self-directed IRAs today. And obviously, Fawad and I have had a little conversation beforehand talking about this particular type of investment. I'm going to say a few things about self-directed IRAs. First of all, as kind of an orientation, I'll tell you just a little bit about New Direction IRA. And then we'll talk about the specifics of this type of self-directed IRA investment so that you kind of get a sense of what the expectations are and how it would work for you. So first of all, from a self-directed IRA standpoint, a lot of people don't know that the laws that allowed this alternative type of asset in IRAs was the same one that set up IRAs to begin with in the 70s. In other words, alternative assets, quote unquote, were always available in IRAs. Mostly people don't know about it because banks and brokerage houses offered IRAs, and generally speaking, when the stock market or publicly traded securities are performing in a way that people can take advantage of them, they don't have a lot of impetus to look for the alternatives. But the alternative assets have always been available in an IRA. In other words, the money that you put aside as retirement savings in these tax-advantaged accounts can be invested in real estate or private companies or precious metals, a variety of things, just the same way as it could be in a publicly traded security, stock or a bond or a mutual fund or something like that. And all of the performance of those assets stays in that tax-protected status, meaning that if it's in a traditional IRA, it's still pre-tax money, and as the asset grows, all of that value stays within the IRA until it takes the form of a distribution at retirement age. So, the IRS has an interesting way of governing these types of accounts. They really tell you most of the things that you can't do, and then everybody kind of figures out what happens in the middle. So the two basic rules that apply to IRAs or these tax-protected accounts are, in terms of asset classes, is no life insurance and no collectibles. Meaning that, life insurance is pretty self-explanatory. Collectibles is things like fine art, collectible coins, cool old cars, that kind of thing. Those types of assets the IRS does not allow, but pretty much everything else is available. And what that means for an investor usually is that if they know how to make money outside of their IRA, they can usually make money at that same thing within their IRA. Often what you have to do is find a self-directed IRA provider that services those assets. Self-directed IRA providers like New Direction are not required to service any particular suite of assets. As a business model, each company decides which assets they're going to do the administration for. And so in the case of New Direction, we try to do as many of the alternative assets as we can, and basically try to work with investors to, again, take their expertise outside of an IRA and be able to leverage that inside their IRA. So in the case of private equity, like we're going to be talking about today, really the thing that you're looking for is an administrator to do the bookkeeping, administration, and provide the custodial services. The IRS basically will trade the tax advantages for you following the rules that they've set up to govern these accounts. And that's really the core of what's happening here. It's a bit of a trade. Tax advantages for following these specific rules in terms of contributions, distributions, and the way that the assets are handled. So like New Direction IRA, what we're really doing is making it possible for the IRA to invest in those alternative assets. Meaning that we, as part of the IRA, and therefore keep the tax benefits. We started business in 2003. We have about 6,500 active accounts right now, a little over $500 million that we're doing the administration for, and we have real estate, precious metals, private equity, loans, et cetera, et cetera. Again, we try to work with the investors that come to us and say, hey, can you do this? Our role is really to talk about how the account works, how an IRA works, what the IRS restrictions are, and to make sure that the asset or the investment conforms to that so that, again, it can receive those tax benefits. One of the things that I like to mention when I'm talking to groups about self-directed IRAs and a particular investment is that the self-directed IRA companies are a little bit different financial service paradigm. I know from my personal perspective, most of my financial dealings up until a few years ago was generally somebody was either selling me something or somebody was selling me on themselves, an advisor, and then I would judge whether that was something I wanted to do, and then the advisor would either take the money and go ahead and invest it, or I would purchase the investment. Generally speaking, there is a person who's talking about the investment, then that's the paradigm that I'm used to. And sometimes when people come to self-directed IRAs, they're not ready for the fact that it really is the account holder or the IRA holder that is going to do the due diligence on the investments. So we provide the custodial service, the bookkeeping and administration, but we do not vet any investments. In fact, we're a very neutral business operation. We basically do bookkeeping and administration. And we charge accordingly, and I know in this particular case, Fawad and his group are going to take care of the fees for us, but the role that we play is really, again, the vehicle to access those assets. We don't give tax, legal, or investment advice. We don't advocate any particular investment or vendor. But we do allow you to decide which of those you'd like. And so hopefully what we're doing is giving you the ability to capitalize on a great deal when you see it, and keep the tax benefits that are associated with the IRA. So that's really our goal and our spot in the equation. One thing that I'll just make clear, and I know I've talked to Bob a little bit about this, is simply that for an IRA, particularly a traditional, you can roll over as much or as little of an old 401k or a lot of other plans like 403bs and even defined benefit plans and things like that into a traditional IRA. That process can take a little bit of time. I generally tell people 1 to 4 weeks after they've set up the account. So that's something to keep in mind from a time frame perspective. But generally speaking, any retirement money that you have that's in that pre-tax status, which is the same as a traditional IRA, can be rolled over into a self-directed IRA company to make an investment in an alternative asset. And that's really the kind of the beginning point in setting the stage for this particular investment. And so what I'd like to do is just run down the particulars of how it would work in an individual circumstance where you would be purchasing private equity or private stock. It can be characterized a couple different ways in an investment like Alarafa LLC or any LLC. So generally speaking, the first step is to open an account as self-directed IRA provider. So if you've got our paperwork, it's three pages of application and a fee schedule. You return that to us, and it takes us about 2 business days to open the account. At that point, we would start to move the funds. So again, an old 401k, an old 403b, in some cases 457s, defined contribution plans, defined benefit plans, almost anything that's in that tax protected status can be rolled over as long as that plan provides that it's available for you to roll it over. And that as I say, can take a little while. It really depends on the provider of that particular account. From a rollover perspective, you would basically contact them and say, hey, I'm going to do a rollover to another custodian. You don't want to have them keep withholding. In some cases, plans will want to take withholding because they feel like you're distributing those funds. And in this case, you're not really distributing them, you're just moving them from one custodian to another. So you would initiate the rollover process, have that money brought over to the account at New Direction. And in our case, cash assets are kept in a bank. It's Colorado Business Bank here. We're based in Colorado. And it's FDIC insured. And the way that we have the account set up, it's FDIC insured no matter what the amount, even if it's above $250,000. Comes with the account is FDIC insured, and it basically once the money gets here, it's really awaiting your direction. We can't do anything without your written permission with the account, because it's really an IRA is really portable with you, the IRA holder. It's not really portable with us. In fact, if our company went out of business for some strange reason, what would basically happen is your IRA would then just move to another custodian. The assets would still be there, they'd still be associated with you, and they would simply move to another custodian. In any event, as I was talking about the investment process itself, we have to have written permission for everything that happens. So I'm not going to lie to you, there is some paperwork involved in setting these things up and making the acquisition. We try to make it as easy as possible, and we're always here to help to fill out paperwork or if you have questions or things like that. But what will happen is once the cash is here in your cash position for the IRA, then you will be giving us directions on the investment. And in this case, what we're talking about today, the Alarafa, and that's a private equity type of acquisition. And so what we will receive are a few things from you. There's a bi-direction letter of ours, which is basically the account holder's permission that you give to us to send money out of your IRA to Alarafa to secure that position, to secure that equity or the stock. And then at the same time, we will be receiving some documentation from Alarafa LLC that just says, yes, this is the description of what the IRA is going to be purchasing, and this is what they can expect in terms of return or whatever way the deal is constructed. And really, you have a lot of flexibility in that, in as much as you will be dealing and constructing the purchase with Alarafa directly. That's something that you negotiate yourself, and I suspect that you guys have already been talking about that today, so maybe that's already hammered out. And what will happen is, once you have the terms of the agreement, Alarafa will paperwork along with the paper trail that we need to justify the account and so IRA, it purchased this asset, and so whatever returns that asset makes, or doesn't make, I guess, but whatever happens with that asset, it is part of the IRA and deserves the tax benefit. So that's really the way it works. Once the acquisition has occurred, and we have an online kind of portal where clients can take a look at what their investments are, there's a couple of things that will happen through time. One is that asset, that equity position, needs to be valued once a year. Part of our service is to submit a form 5498 to the IRS, which basically says what the raw value of IRA are in that year. And in this case, Alarafa would be providing that valuation once a year. And then as time goes on, depending on how that goes, whenever you get to where you want to start to take distributions, then you can do a couple of things. You can either take distributions by liquidation and taking out distributions in cash, or you could take a distribution theoretically of the equity position itself. And a lot of that really has to do with your relationship with the LLC and what's going on with the investment and things like that you will be deciding and negotiating. But from our perspective, as an entity that's kind of protecting your interest from an IRS perspective, all of those things are possible for you. And if the investment performs in the way you want it to, and it's time for you to change assets or things like that, you can always go back to a cash position and purchase another asset or have another asset with Alarafa or another agreement or engagement. It really is the account holder's prerogative to decide what they're doing with that money. And so that's the basics of the setup and how it would work for us. And again, we are that vehicle. So we have to have direct contact with the holder in terms of your signature, things like that. Links also with all of those as well. And my point being in all of that is that we will try to make the relationship between Alarafa, New Direction, and you as seamless as we can, while still protecting the status of the account. And so that's really our goal here, and we're really pleased to get a call from Fawad and be able to talk to you a little bit about that today. I'm happy to answer questions. I flew through this relatively quickly, and if it's a new concept to you, it can be a little bit hard to assimilate all at once, but I'm happy to answer questions and stick with you for a little bit.
Thank you, Clay. Just give me a second, and I'll ask the audience if anyone has any questions. If anyone has any questions pertaining to the transaction of this self-directed IRA, Mr. Clay's here, I'm here, we'll be happy to give you a little bit more detail. If not that, you can, as I said and mentioned to you earlier, that we have a contact information. You can contact us, and we'd be happy to give you the information of Mr. Clay, that he will be also happy to help you out and give you more detail in terms of the process, or if you have any other question that you have, you are concerned about your retirement plan. So if you do not have any questions, so I would like to say thank you to Mr. Clay for coming in on Sunday and sharing this information with us. And we really thank you very much, Mr. Clay, for coming in today and sharing all of this information. And it was a pleasure talking to you and seeing you, and hopefully we will follow up with you next week.
Well, you're most welcome, and I know that while you have my direct extension, and please feel free to pass that to anybody in the meeting there. If I'm not available, there are lots of other staff members who could also help you, but I'm certainly glad for you to just call me directly with any questions that you might have. And again, I was really pleased to talk to you, Fawad, and get an invitation to this, and we're glad to be working with you.
All right. Thank you very much. Appreciate it.
Okay.
Okay, so thank you very much, all of you, and the people who just came in late. I would just like to share one information with you guys, that people who came in late, that we just spoke all about the real estate investment and how we can talk to you in detail, but we have shown everyone and shared information that how you can convert your $150,000 into $1 million in 8 years. That's the key. We wanted to make sure if anybody who has $100,000, $150,000, and if they wanted to be a millionaire, inshallah, if they work with us, we will help them to make their money, and Alarafa will be the vehicle to make their money into $1 million. Now, at the end, I would like to request Mr. Luke Bigelow, who is our legal advisor, to please come in and just share his little bit point of view in terms of these types of properties that we are involved in. Mr. Luke.
Thank you very much. Thank you. As you said, good afternoon, everybody. My name is Luke Bigelow, and I'll tell you a little bit about myself. I've been an attorney for 20 years, and my office has been in Jamaica on Hillside Avenue for many years. I recently moved down the block a little ways, but I've been in the community for a long time, and I've been doing real estate for a long time. So the perspective I want to give you is a little bit about the actual process on the street, i.e. buying houses, selling houses, things like that. First of all, like I said, I'm extremely excited about this program. I really, there are so many things in the world that we think that we know. We live our life and we learn every day. When I sat down with Giash and Fawad, it really blew my mind that this was a wonderful, wonderful opportunity. Where your IRA, I had IRA for many years, and I've seen my returns 2%, 3%. It's down, it's up, and most of the time they invest in stocks. And, stocks go up and down and down and up, and it seems like, after 7 or 8 years, you're back where you started. I'm not an investment advisor. I'm not going to give you financial information, but I do want to talk to you a little bit today about my perspective, my own personal story, my own experiences, and you can take from that what you will. But I saw the IRA go down and up and up and down. Real estate is a completely different investment, as we know. It's actually an asset. It's not a piece of paper that you're investing in General Motors, and you hold it for 10 years and it goes up and it goes down. It's a physical asset. It's a house. You can see it, you can touch it, you can shine it up, fix it up, and sell it. I was in the Army for 11 years, and I learned many things. But one of the things I learned was, I think everybody is old enough, in the late 90s we had that dot-com bubble. Remember that? And stocks were going through the roof. And we were all, I was in court many times. I had a lawyer come up to me. I was trying a case with him, and he came up and he kept checking his phone. So what is going on? He goes, I'm seeing how much money as I'm sitting here on trial with you. And eventually, at the end of the trial, he said, I made so much money, I'm not going to practice law anymore. Now, as we know, that all went boom and bust and burst. And I don't know if he's still practicing, but I was thinking of that guy as to whether he actually sold and got that money, or whether he wrote it down as we all did, and we wrote it up and wrote it down. So I had 2 colonels in the Army. Colonels in 06, it's a senior officer that been in the Army for 20, 25 years. And one of them kept talking about stocks. His grandmother had given him IBM stock many, many years ago, and we were just having lunch or something. He was very happy, very in a great mood, and he said, I'm a millionaire. He said, I got IBM stock for 20, 30, 40 years, and I'm an absolute millionaire. And that's great, sir. That's wonderful. And so everybody was talking about stocks and the .com, and which stock was hot, which to buy, how they could make their money, double their money. And there was another colonel, who actually was the senior colonel, very quiet and didn't really say too much. And I knew that he was into real estate. He was a real estate investor. And at the end of one day, I went up to him and I said, sir, I said, Colonel Line, everybody is buying these stocks and they're making all this money. What stocks do you buy? What stocks should I own? And he looked at me and said, I don't own any stocks. I said, sir, you don't own a single stock? This is the .com bubble. It's doubling, tripling. He said, I would never buy stock. I said, what? I said, I only invest in real estate. And I said, oh, that's that. And so he started talking to me about it. He said, well, it's an asset. He said, it doesn't always appreciate, but it's not going anywhere. The physical asset is there. And he told me a story about how he bought years ago when he was just starting out. He worked for Citibank for many years, and he made Citibank a lot of money. And he thought to himself, why am I making Citibank all this money? Why not make money on my own? He went on his own, and through his contacts in the industry, raised money, similar to this situation. He raised money, and he went out his first purchase. He bought a parking garage in Boston, Massachusetts. He said he bought it for, I think, $3 or $4 million from an old Italian man who had owned a parking garage forever. And it was right down in the Long Wharf area of Boston, very popular tourist area. Well, there's a big parking garage that's right by there. It's like a 4-story garage. And he said, he was not a bragger at all. I mean, he lived in the same house he bought 30 years ago, drove an old car. And you never know if somebody has money or doesn't have money, And he just looked at me, and some small comment he made said, that parking garage is worth $60 million now. And I said, you know what, sir? That makes sense to me. That makes logical sense to me, that you would go ahead and invest in real estate. I've always thought about that, and I've always learned from my two colonels, and for that I thank you. So when I heard about this program, I said, this actually makes perfect sense. You can take your money, you can invest it in real estate, and then you can sell it. Now, the way that these guys are doing it, they're doing it in a safer way than other ways that I see it. I mean, there's always some risk in life. I mean, the risk is inherent in life. But you can manage that risk and put yourself in a good situation. That's what we're all trying to do. And what they're talking about is selling the asset right off the bat, negotiating with banks. Banks, the foreclosures that are out there, there's wave after wave. And what actually happens is the banks hold back on their foreclosures because they don't want to flood the market with foreclosures because that would drive all the price down. So they actually hold a bunch of foreclosures in reserve and they let it eke out and slip out. So the foreclosure process is going to go on for at least 2 years, at least more, 3 years. I don't know. Nobody really knows. But what this company is going to do is they're going to buy that asset from the bank right away. Now, the banks, they don't want to own real property. The banks don't want to be property owners. Banks, I found out, banks don't like to be sued, and they don't like to hold assets. They like to get rid of the assets. So a company like this, with the breadth and the capital, as they said, if you have $3, $4, $5 million in the bank, you can go to Bank of America, Wells Fargo. They all have, hundreds and hundreds and hundreds of houses in New York City. You can go there directly and see, we can take 20 houses off your hand. The bank's more than happy to listen to that, because the banks don't want to hold that asset. Because the bank has to winterize the house, they have to fix up the house, and they have liability if they own the house. The last thing the bank wants to do is own the asset, although they end up owning many, many assets because the payoff of the mortgage is much higher than the value. So this company can come in and buy that asset, and what they were talking about is selling it early on. So if you can buy 40 cents on the dollar and then sell it for 60 or 70 cents on the dollar to an investor, and I know a lot of investors myself, full time, they buy and sell, buy and sell. In fact, I see a few investors here in the audience today, so, and there are many faces I know. So if you can sell that asset quickly, that makes sense to me. I talked a little about short sales. The short sale is where the seller, the owner, is underwater. The value of the mortgage is much higher than the value of the property. So that person is pretty much given up. They get phone calls every day, pay your mortgage, phone calls, letters. Their friend can help them out. They're on TV, they'll get harassed, that everybody's going to save them from foreclosure. Well, a short sale does that. What a short sale does is the bank accepts less than the value of the mortgage. It allows the seller / borrower to move on, get out of their house, stop the phone calls, end the nightmare. And of course the buyer gets to purchase that property under market value. That property is set not by the buyer, it's set by the bank. The short sale bank is the one that does its own appraisal. So the value you're going to get will be set by the bank. It's completely arm's length transaction, whatever the bank says the price is. But 100% of the time, it's under market value. And that's the purpose of a short sale. And it sounds like they're going to fix up some of these, but basically after they buy the asset, they're going to immediately sell it to another investor under market value, and then that investor will eventually sell it. The other thing they can do, as they said, is they can fix it up, which you do have to fix it up. Everybody loves stainless steel appliances. Everybody loves marble top kitchens and bathrooms. They shine at that, and you can go ahead and sell that asset at a 30, 40, 50%. Those returns are absolutely realistic because you're buying it at such a low price. That the other thing that they said, which I like, that they told me, is that they're not going to wait for top dollar. I see so many people. They can make $80,000, but they're holding out for $100,000. And to get that top dollar it's possible, but it takes time and value. If you can sell it for $80,000 instead of $100,000, why not take the $80,000 and cash out? And it sounds like that's what they're going to do with this company, which makes perfect sense to me. It's important to do a title search to make sure there's no liens, no judgments, no encumbrances, none of that stuff on the property. And that's my job as the attorney, is to make sure they're getting clean title. And a lot of these distressed properties, of course, people in foreclosure, their lives are pretty much out of control. So there are a lot of issues. So clearing the title is something that absolutely has to happen and will happen. It takes a little bit of time, and that's my job to protect and make sure that they're buying good title. Typically, and there are loan officers here in the room I see, there's a seasoning requirement where if you were going to sell it, some banks require holding it for 90 days, other banks don't require holding it for 90 days. That's another issue that I'm sure that they will go over. Now, it's very important to find, it keeps talking about the team that they have, and that to me makes a lot of sense because I know a lot of people in the business. I know a lot of real estate brokers, I know a lot of mortgage brokers, and I'm always amazed that there's a certain percentage of people that can actually get through life not quite knowing what they're doing. But that always gives me hope because I've seen it all, I've done it all, I've seen the good, I've seen the bad, seen the hard, I've seen the easy, and yet there's people out there that I know what they're doing, yet they're making money. That means that the rest of us that know what we're doing, that inspires me. And the people that are associated here today know exactly what they're doing. And that's who you want to work with. The thing, and I don't know if you caught it, I just want to emphasize what Clay was saying. The technical part of it is that when you guys are giving your IRA money, that's now sitting there earning 2-3%, giving it, and then in this case, investing, making a lot more money, you're actually going to be buying stock in the company. So this funding company will own the asset, but you guys will own stock in the funding company, which will own the asset. And then your percentage of return is based upon your investment. So if you have 20% of the asset, you're going to get 20% of the profit. And does that make sense to everybody? That's you're not going to physically own the house, you're going to own stock in the company. And then that company will own the asset, fix it up.
I also just wanted to share that all the investor will be actually a limited partner. So technically, you will have a piece of the company. You will be part of the ownership of the company. That's your one security. And second, the security is that all the investments we will have will be in form of real estate or cash. So technically, we are not buying any inventory. We are not looking for sales. We are buying assets that will be 30 cents, 40 cents to $1. So if there is even downturn in the market, still your investment would be safe and secure. And as you can see, I just left this one slide over here to show you the return. $150,000 in 8 years' time, or you can have $1 million. Why? Because you keep reinvesting your profits and your returns are 40 to 30%. Again, this is a conservative investment. Right now, there are certain companies on Wall Street who, in 2012, they gave a return in real estate investment 50 to 60%. Why? Because if you have $100,000, we can invest that money and recycle it 2-3 times. Every time we make 20%, 15%, at the year end, we still make 45%. And second, if your money is strictly sitting in IRA, it is not moving, or it's not growing the way it was supposed to grow. So the best option is, if you have money sitting in IRA, you can move that money into, sell that IRA. From there, you can invest it in real estate. Thank you.
Almost finished. Just two other things I want to say. One, you heard they're playing what they can do, and they will see as they get in this business that there are multiple opportunities in real estate. In addition to purchasing short sales and REOs, a lot of people are now purchasing what we call notes. They're actually purchasing the mortgage of the note. That's an option. Then you negotiate with the actual owner to buy the deed, because buying the notes or the mortgage does not mean that you own the house. It means that you own the debt. But then you negotiate with the owner to buy the deed. So once you get the deed, then you can do whatever you want with that asset. And if the mortgage that you're going to buy is going to be, again, 40 to 50 cents on the dollar, and that's another way to do it. Sometimes there's tenants, you have to evict them, things like that. But that's all our job and this team that we put together. The last thing I want to say is that I have been doing this for 20 years, and I have seen the ups and the downs. And there's certainly no perfect time. Having said that, right now, the interest rates are 3 point, whatever, 5, 6, 7.
3.5% to 3.65.
It's truly amazing that first-time home buyers, when they go to a closing, they don't really understand what they're getting or not getting. You know, they want the best rate. But I can't say how many closings that I did, 6%, 7%. Then the rates got to 5%. And I was like, wow, 4%? Now they're at 3%? I certainly no expert on interest rates, and nobody controls interest rate, no one knows interest rates. Having said that, the Fed now is pumping tons of money into the market to keep those rates low. And that's going to go on until 2014. So the time is now. I would not hesitate, because the end buyers can afford to buy a more expensive house because the interest rates are low. So you can get someone into a house they couldn't afford before at the higher interest rates, but these low interest rates, there's a market for the end buyer. So buying it at a discount, shining it up, and then selling it to an end buyer that's going to get a 3.5% is tremendous for the end buyer, and it'd be tremendous for you guys as well. I wish everybody luck. I'll give you my card if you want it. I can answer all questions from A to Z and what it's like to do real estate out on the street with all the investors. And I wish everyone luck, and I hope everybody makes a whole bunch of money from the IRA. Thank you very much, guys.
Thank you very much. And if anybody has any question, I'll be happy to answer. Myself and Mr. Fiaz will be here. Since we have been listening, we'll be talking. It's time to eat and drink. So lunch is on. Thank you very much for all of you for coming in, and give us an opportunity to share this information. And hopefully, when you will walk out with some wealth of information, which will help you to make a good financial decision on this. Thank you very much once again. Good luck.
One thing I would like to tell before is the old violin story that I think a lot of you know. There's an old, rotten, very dirty violin. So there was like auctioneer tried to auction this violin. They are trying to sell for $1, no hand. $1, 1, 2, 3. Then one of the old men with a brown jacket, he said, "Just give me a chance." He went there, he cleaned the violin, and he just put the string on and made a very good lead, very nice. He played it like angel way, just played it for like 10 seconds. Then he started 2,000, 3,000, and he ended up selling it over $100,000. It's called master touch. And you see in this real estate industry, a lot of people buying and selling. A lot of people call themselves as an investor, but it's called know-how. We have the team of master touch, mastermind people who is behind it and making it happen. And thank you all, and thank you very much for your valuable time, and alhamdulillah. Thank you. And if you have any questions, feel free, we're here. Thank you.
Welcome to Alarafa. In the first screen? No, like now. I can. In the first slide. In the presentation. Okay, you can minimize it.